Welcome to Bruce Talks, the show that's all about making crop insurance make sense. I'm Bruce Lantzky, a crop insurance agent with over 25 years of experience and a producer right here in Northeast Iowa. Today we're going to go over the increased premium subsidy levels for the 2026 crop year that were enacted due to the One Big Beautiful Bill. The subsidies increased anywhere from 3% for the 75, 80, and 85% coverage levels, up to a maximum of 80% subsidy, and the coverage levels for 70% and below were increased by 5%, up to an 80% maximum subsidy. The other big thing is they're going to be raising the ECO plan from 65% in 2025 up to 80%. If you remember, back in 2024, the premium subsidy for ECO was only 44%. Last year, there was a large increase in ECO coverage due to the increase in subsidy from 44 to 65%. This year, they've raised it up to 80%, effectively giving you $4 of every $5 as a subsidy on the upper level plan that ECO affords. So this next table shows how, for Chickasaw County corn, regular 207 APH, this one shows how you're keeping the same level of coverage, a 75% enterprise unit with SCO and ECO, how the increase in subsidy premiums has dropped your overall producer premiums over the last couple years. If you notice, the total coverage would stay the same at $933. You'd have $730 of that as individual coverage. In 2024, that premium to purchase the entire package would be close to $38.65. With the increase in subsidy for ECO in 25, that reduced to $29.11. In 26, it's going to drop all the way down to $17.99, close to a $20 decrease from the 2024 levels. There's multiple things we can do here. We can either continue to stay at the current level and grab the premium savings. If you were to do this next chart shows $27.79 premium for an 85% enterprise unit with SCO and ECO, which is an $8.92 premium savings. You can choose to continue to insure exactly the way you have been. You can utilize that $8.92 for maybe an improved hail and wind policy to provide that top-end coverage in the event of an isolated wind or hail event. The other option that you could take a look at, and this is if you have some ground that's a little more variable, is maybe you drop down from an 85% enterprise unit, you drop down to an 80% optional unit, where now you have individualized coverage by section. You still have the top level county plan premium, but this is going to save you $6.28 instead of $36.71. Your new premium would be right around that $31. You can either put that savings to work, purchase some additional hail coverage. This would be for a customer that has some variable ground. Maybe it makes sense to switch over to the optional units. And finally, for those who maybe have really good farms close together, have historically trended very close as far as units, the other thing you may want to consider is doing instead of 85% enterprise units, switching down to a 75% enterprise unit level. The total premium would then be $17.99 versus the $36.71. It's going to save you $18 over last year's premium. You're going to have a little less individual coverage. Instead of $826 an acre of coverage, you'd have $729. But for $18 an acre, you could use half of that and still have a very good wind or hail policy to help protect that top-end coverage in the event of an individual event. So the biggest takeaway from this is these increased premium subsidies is, it provides you an opportunity to add more coverage for the same or less premium. You can also look at other options that are available to you, like switching to optional units. We have some tools that we can look back historically and compare. You can look at lowering your RP level and using that premium savings to insure for wind and hail. I think this would only be for producers who trend well with the county, have acres close by. I don't think it's necessarily a plan that would be for everybody. You kind of got to ask yourself if the current plan's providing you the best coverage for your operation. So that's going to be a wrap for today's episode of Bruce Talks. We covered the changes in the subsidy premium levels for the 2026 crop year and how these will affect your premium dollars. Options need to be reviewed and determine if you want to look at additional coverage for the same dollar, improved coverage for the same dollar, or saving your premium and keeping your coverage at the same level. If you have some questions on how the changes in these subsidy levels could affect your operation, give me a call, reach out to me on social media. Be sure to join us next week. We'll break down another timely topic that will impact your farm, from risk management strategies to government programs to crop insurance, so you can make confident, informed decisions for your operation. Thanks for tuning in to Bruce Talks, where we'll keep your farm future in focus. See you next time.